Welcome to the Prime Property Finance Podcast with Gareth Morgan and Mark Watts. This unique podcast will dive deep into all areas of property investing finance, going behind the scenes with property professionals, investors and clients. Between us, we have 35 plus years experience in property finance. The podcast has been launched to share knowledge, mindset requirements and experiences of successful investors and professionals. We aim to simplify many of the complicated areas of finance and investing and provide valuable and easy to implement tips. Keep an eye out for our new longer episodes every Tuesday and our shorter ones every Friday. Most people insure their homes, their cars and even their phones, but very few properly protect the thing that pays for it all, and that's their income. We tend to assume we'll always be able to work, always earn and always cover our commitments. The reality is that illness or injury is far more common than people think, and the financial impact can be immediate. In this episode, I'm going to break down why income protection is one of the most important and often overlooked parts of financial planning, what actually happens if your income stops, and how it compares to life insurance and critical illness cover. Most people assume they'll work consistently throughout their career, but actually the data tells a different story. So in the UK, around 1 in 4 people will experience a period of long-term sickness during their working life. And there are currently over 2.5 million people in the UK out of work due to long-term illness. And when people are off work, it's often weeks and months and not just days. So when you ask someone, have they had any time off work? The first thing that they think about is, I had a cold here, I had a bit of a bug there, and I was in bed for a couple of days. But it's not actually those things that this is important about. This is long-term illnesses. So think about accidents, car accidents, trips, hazards, broken bones, dislocated shoulders, ACLs, a lot of things that I've done through sport or recreational activities, or falling off a ladder at work and things like that, accidents at the workplace. But also then is illnesses. So things such as, if everybody knows someone who's had cancer, and that just isn't a one and done thing. It can get progressively worse. It can be really bad for a certain period. You can go in and have some surgery, and then you're bad for chemotherapy, radiotherapy, be bad for a while afterwards, and then get better, and then be bad again if you need to go in for another round. So it can be an on and off type effect. Then also you've got degenerative diseases such as, MS and things like that, where you're only ever really going to get worse. And over time, you are going to get to a point where you're going to be unable to work. So the biggest risk to your finances isn't actually dying, because a lot of people have life cover and they have quite a lot of life cover, but it's actually losing the ability to work for a sustained period of time and earn money. So what actually happens if income stops? So, ultimately, if your income stops, everything else doesn't. You still have bills to pay. Your mortgage is still going to come out on the 1st of every month or whatever it may be. Your rent still needs to be paid. Gas, electric, water, all of these things still continue. If you've got a family, then obviously you've got childcare, transport, food, living goes on, even if you are unable to live. So think about various different households, how that will impact you and your household and your personal circumstances. Another factor is that most UK households have less than 3 months protection in terms of accessible savings. Some people have got some savings, but they lock it away over a longer term, or if the markets dip, then it might not be a good time to release some of that. It'll cost you penalties and interest. So for the majority of people that we speak to, the financial impact of illness isn't long-term, it's immediate. How long could you survive without 1, 2, 3 months pay? And obviously, if you can't survive 3 months, then you certainly can't sustain something longer into 6, 12, 24 months and longer. We know from insurers that income protection claims, that when people do claim on income protection, the average claim is 7 years. So imagine being off work for 7 years, and how would that impact you, and how could you afford to keep living? So ultimately, for individuals, if you have a house and you live on your own, you are the sole breadwinner for that house, And you have to, you really need to keep that. So if you can't, that roof over your head, and you need to keep the heating on, if it's in the middle of winter, you still need food, etc. So if you don't have any protection for yourself in terms of savings or any income protection or sick pay, then you really, really need to consider this as your first point of protection. The same thing for families. If there is a sole income in the household and you're the sole breadwinner, you're supporting 2, 3, 4, 5 people, there's a huge reliance on you as that individual for the income, and that can affect the whole household. So even more so than just a single individual, you really, really need to get this in place. Again, if you imagine about, life after death, what happens to you if you're not here? But it's actually, the life insurance can look after that. But if you're still alive, but you're unable to work, then that could be a big problem. And, knowing what it's difficult now with the cost of living crisis, everybody knows that, it's difficult just living. Everything's gone up in price. Doing things is, shopping's gone up, petrol's gone up. The cost of just everything across the board is more expensive. And if you are struggling to make ends meet when you are in work full time and at full capacity, just take a moment and think what that would be like if you were even just in work 50% of the time. And so your income would drop by half, how that would just impact your whole family, your whole lifestyle, your whole current living situation. So please take some time and have a think about it and look at the numbers, because the numbers don't lie. What could you cut and what couldn't you cut if you were off long term? And what do you actually need to get by? And then for business owners and investors, debt still needs servicing, property still need managing, especially if you manage this properties yourself. What can you do about that? You might have to employ someone, and where's that money going to come from if you're still drawing money from the portfolio? And financial commitments don't pause. You've still got your bills to pay. Expenses don't stop, and you have to keep maintaining those, because we have to look after our credit ratings. And of all the people, or the majority of the people that, the two big reasons that people get into debt are, one is through poor relationships or divorce, and two is because of ill health. Every time we speak to someone who's got a blip on their credit, a lot of the time it is because, I was out of work for a sustained period and I couldn't pay my bills. You don't want to be in that position, because the cost of putting this in place isn't that much, when it could cost you in the future thousands and thousands in extra interest and extra fees for paying higher rates on finance that you don't need to if you protect this in the first place. So what support do you actually have at this moment in time? So most people are surprised by this. Statutory sick pay in the UK at the moment is £116.75 per week, and that's paid for up to 28 weeks. That's just over £500 a month for most people. That doesn't even cover the costs of their housing, their mortgage, their rent, etc. Could you live off £500 a month? My pretty sure answer to that is going to be no. Okay, so if it's not, what can you do about it, and what do you need to do to get that sorted? This is, we don't plead much on this podcast. Hopefully, you if you've been listening to the show for long enough, we try and add as much value as we can. But this is a real nod to, you need to make sure that that you've just got everything in place, and income protection is one of the foundations of protection. So whilst you're trying to build and create your wealth and increase your net wealth year on year, in the fundamental early parts of financial planning is protecting what you already have. And one of those is your income. A lot of people think that if they're employed, that their employers will cover them. Only around half of UK employees currently receive limited or short-term sick pay. Most people will revert to statutory sick pay. There's been a mass reduction over the last probably decade or so of the gold-plated pensions, the gold-plated employee benefits provided by bigger companies, where you'd have basically full sick pay until you came back to work, or you'd have full 6 months full, 6 months half. A lot of that has gone, even with some of the NHS and councils and things like that, the big employers. They have just really squeezed what that looks like. So you need to understand fully what that is. We've seen a lot of people as well, and people who have come to us who have said, my contract, it says at the company or at the director's discretion. Now, that is just an open point for them to be able to refuse to pay you because it's discretion. If you are off work because you have cancer, they probably take discretion and go, yeah, we want to help this person. But what does help mean? If you don't have anything, does that mean a week's pay? Does it mean a month's pay? Does it mean 3 months? Does it mean 2 years? If it's not in black and white, you have to just accept the fact that it probably isn't going to come. And then therefore you need to cover yourself. So what is income protection? Income protection is designed to do one simple thing, and that's replace your income if you can't work. Typically, it pays around between 50 and 70% of your income, depending on the provider. It pays you monthly. So effectively, it's like a salary to replace the cadence of a salary on a monthly basis. It covers illness and injury. And one thing that this doesn't do on an income protection only policy, doesn't cover you for redundancy. So if you're made redundant from your job, fired or anything like that. So this is for illness and injury, and that can be anything. So whether you're off work because you have an accident, just like I said, around the house, which is quite common, if you've had an accident through your activities or through work, or it's just an illness. So anything, effectively, the easiest way to think about it, that keeps you off work. If you get a doctor's note for something that keeps you off work, effectively, that's what this would cover. So in the event of you having this policy in place, you can select when you want this to pay out. So you could pay out after 1 month. If you don't have any provisions in place at the moment through your employer, you could have it pay out after 2 months, 3 months, 6 months, or 12 months. So the longer the deferred period, which is the longer you have to wait before they start paying out, then the cheaper the policy will be. So for instance, if your employer offered you 3 months full sick pay and then nothing after that, then if you're off work for a sustained period, this would pay out. Then for 3 months, your work salary would pay out for 3 months. And then after 3 months, your income protection policy would kick in, and that would pay out until either you return to work or you reach the end of the policy. Okay. And then in some instances, if you were off, you went back to work and then you were off with the same condition again, some policies will pay out again. So it's not a one-off payment, it's ongoing financial support. And how does that compare to life and critical illness cover? So sometimes there's a bit of confusion around this. Life insurance, it pays out if you pass away, and that's designed to protect your family. Critical illness pays out the lump sum in one go and then the policy ends, and that's for a specific serious condition such as heart attack, cancer, stroke, MS, and it's a one-off payment and then the policy ends. There are some policies within critical illness that have partial payments for less serious conditions, which will pay a lump sum, but you'll still maintain the policy. But this is a lump sum payout rather than a monthly payout. And like I said, income protection is a monthly payout. It covers a wide range of illnesses. It's not a specific list. It's basically anything that you could be off for. You could be an example where you could have cancer and be covered by critical illness cover. So you would have a lump sum, which you could use to maybe make adaptations to the home. You could use it for private treatment or just to go on holiday and relax. And if you had income protection as well, that would give you a monthly payout to cover all your bills. So it supports you whilst you recover and take time off work. And there's obviously a lot of expense in going and getting treatment and back and forth to the hospital, etc. Life cover protects your family when you're gone, and income protection is there while you're still here. Okay. We often insure against the least likely outcome and ignore the ones that are far more likely. So what we're saying by that is you are far more likely to be off work sick for a sustained period than you are to die before the age of 70, based on the stats. So just really bear that in mind. And why don't people have it? So common suggestions that we get and thoughts that we get from people is it won't happen to me, which is just nonsense. You are not invincible. If you speak to any of the older generation, anyone that you know will have had some time off work for something or other. I've got savings. Again, we know the stats don't lie. If you're in the top sort of 10%, then fantastic, you are protected. But you've worked hard for those savings. Do you want them to go over a short period? If they are lifetime pension, retirement savings, do you want to use those up for that example? My employer will cover me. We've already talked about that, and I'll sort it later. And this is the one that you have to get on top of, because I bracket, I don't know if anyone knows Stephen Covey and his quadrant of tasks, and the most important and non-urgent is task 2 items. And for me, this is where insurance sits in. This type of insurance is a task to a quadrant 2 type task, which is it's urgent and it's not important. Or people class it as not important, whereas it should be in urgent and important. And it's an easy one from your life admin checklist to put off till later. And if you do that, you do run the risk of coming back when it's too late and you've already had an illness or you've already had something happen and then you can't get the cover. Illness is unpredictable, savings are finite, and support is often limited. So this isn't strategy. You have to get on top of this. It's a real core piece of foundation of financial planning. So who should consider this the most? If you're self-employed, if you're a business owner, you're the main earner in your household, if you've got a property portfolio and you've got financial commitments, and effectively someone who hasn't got any long-term employer support. If your lifestyle depends on your income, then you must protect it. When you look at the data, how many people experience illness during their working life, how long they're off for, and how limited the support can be, it becomes clear that that isn't a rare scenario. It's a realistic one. Income protection isn't about expecting the worst. It's about preparing for something that statistically happens to a lot of people. And when you think about everything your income supports, your home, your family, your lifestyle, protecting it becomes less of a luxury and more of a necessity. If this is something you've not reviewed before, it's worth taking the time to understand your position, because the best time to put protection in place is before you ever need it. Thanks for listening, and we'll see you on the next episode. Thanks for listening to the latest episode, and one which I think is super important. So please, if you don't have anything in place, then please consider it and have a look at it. If you do have something in place and you haven't reviewed it for a while, also get it reviewed by a professional. We can help you with that. You insure your possessions, but your income is ultimately your most valuable asset. So please get that checked out, and please share this episode with absolutely everyone. There's no reason whether anyone's working, a family, not interested in property whatsoever, but has an income and a family, then this is relevant to them. So please share it. Thanks very much for listening. Appreciate you. And we'll see you on the next episode. Thank you so much for listening to our podcast. We hope you have learned something and have some tips to take away. We'd be very grateful if you enjoyed the show. You could give us a review and share with anyone that you know that may be interested. And of course, subscribe to the show so you can get notified when a new episode is released. If you'd like us to answer any questions or go deeper on a specific topic, please drop us a message at primeproperty.finance. See you on the next episode.